Today we will go over an extremely good trade practice talking about every single detail. We will do a top-down analysis to cover market structure analysis. Furthermore, we will learn how to find good entry points and tradable areas. Let's start now. So, let's take a look at this setup. After a strong rally, price got into an accumulation phase and pulled back into this lovely multi-imbalance zone. As you notice, it's tapping all four imbalances from multiple time frames. This is great, but let me take a look at the 1-hour chart with a wider perspective as well and determine possible reaction and bounce points. This deep SR flip location is actually a magnificent area for a reaction and a bounce. However, the price bounced right at this BPR location above, as you can see. So what does this chart tell me? Due to my analysis, I have two great bounce locations, but I have zero idea where the price can react or bounce exactly. So what can I do? My best chance is going into lower time frames and observing the possible price action at lower time frames and checking for the market structure change. Now, I have dropped to the 2-minute time frame. First thing I notice is this upside parabolic liquidity, giving me an idea about where the price can head to in the future, basically a visible target. And right at my BPR area, I have two market structure breaks. But wait a minute, how can we have two market structure breaks? Actually, yes, we can. It all depends on the time frames. The bigger break, the upside break, presents the 5-minute based structure break. And right below, the smaller structure break presents the 2-minute time frame break. But why do we need to be concerned about this? It is because time frame determines our setup, our targets, and our stop losses. If you look at the 2-minute structure change, this small imbalance area is a nice entry location. But your setup should be set based on the 2-minute time frame like this one here. Remember this well. Every trading setup should be based on their own time frames like this. Now, if we consider the 5-minute time frame, this lovely inner equal sweep is a great for an entry location. This could have been a great setup for the 5-minute base time frame. However, if you noticed, both setups are actually 2R, 1-to-2 ratio setups. But both setups have different time frame structures. Let me explain in graphical charts so you will understand this better. Imagine this is the 5-minute time frame, and these are the 5-minute candlesticks. So this would be 5-minute MSP, market structure break, with the 5-minute based 2R trading setup. So everything in this picture is based on 5 minutes time frame. However, every single time frame will have its own structure just like this one here. At the same time, these orange lines present a 2-minute structure break inside the 5-minute. 2-minute will have its own MSP market structure break, and 2R trading setup like this one. I hope that this visual will clear your confusion about multi-time frames and multiple structures in a single asset. Okay friends, this was a great lesson. I hope you liked it. See you next time and please take care. If you have completed the free trading course and feel like you improved your trading skills, but you need more, an extra, a boost, and you want to move to the next level in your trading life, my masterclass is ready for you. You will learn liquidity, inefficiencies, and structure mastery deeply. We will look at forward and reverse trading with momentum super boxes. You will learn how to confirm your entries with Magic Alignment System. Finally, you will discover a strategy called YOYO Strategy, which will open new doors for you about taking and managing trades. If you are interested, you